Hello, I am Callie, the marketing product strategist here at OUCU Financial. Thank you for tuning in to the home buying seminar today on your lunch hour. We know that a strong foundation of financial education has value beyond your bank account. OUCU is your dedicated financial wellness partner, and our mission is to help you. Buying a home is a huge deal. Today, our goal is to help you feel more confident during the process of buying your home. As the leading mortgage lender in Athens County, the OUCU Home Team truly are the experts. So ask the questions you have here today. There will be time at the end to chat in your questions. So please hold them until the end. But if you do have something, select the Everyone Chat option. We will have a chat moderator throughout the presentation. For attending today, you all will receive our $100 off closing costs. Our originators will have the names of those attending today, and we will guarantee you can take advantage of this promotion. Thank you, Home Loan Team, for offering that to our members. And this offer will be good through the end of the year. We will be sending out the recording of this seminar to all who are registered here in a couple of days. So now I'll turn it over to Laura Humphreys, Jess Jarvis, Kim Simmons, and Jaden Bizzle joining us from our Logan Lending Center for introductions before we dive into this informative and valuable home buying seminar for you today.
Good afternoon. My name is Laura Humphreys, and I am the AVP of Mortgage Operations and Lending Consulting. Thank you for joining us today. I am going to hand it back to Kim so we can get started.
My name is Kim Simmons. I'm a mortgage originator here at OUCU Financial. I've been an originator here since last year, and as your originators, we're here to help you every step of the way through your home buying process. I did want to give an opportunity for Jessica Jarvis to introduce herself as well.
Hi, everybody. I'm Jess Jarvis. I've been with OUCU Financial for about 7 years. I am an originator as well, so here to help you with your home loan needs. So we'll go ahead and get started now.
So again, welcome to the OUCU Home Buying Seminar. We are so glad you've joined us on your lunch hour today. We're going to go over our objectives of the day. First, we'll do an overview of the mortgage process. We'll dive into what you might need to qualify for the loan, PMI or private mortgage insurance, and what that means for your loan origination process, closing costs, and what loan types are available for you here at OUCU Financial. The first part is the mortgage process. This may be a big, overwhelming process that you're not familiar with, and that is completely fine and why we're here to help. We do this day in and day out, so we're your experts here, and there are no silly or dumb questions. So if you have any of those along the way, please feel free to reach out to us, and we would be happy to help. We are going to go through this mortgage process flowchart kind of quickly, and then as we go on through the slideshow, we'll break these down and go into more detail. So first, you're going to submit your application, then the contract comes for the new home that you're purchasing. Then the appraisal comes, and while the appraisal is completed, you'll also have a title search completed. Also during that time, you'll have any inspections that are indicated by your contract. You'll also be finalizing your homeowner's insurance once you have a closing date scheduled, and then the closing happens. So during your closing, you're going to sign all of your legal documents, and you're officially homeowners at the very end of that process. So you might be wondering where to start, and so that's where we'll go to our next slide. Pre-qualification is your first step, so this is going to determine your path and determine if you're ready to purchase a home or what steps you can take to get ready for future home buying. So in this step, we're going to be estimating some payments based on what you've been window shopping for and what your loan amount is. We'll also be going into your down payment availability, whether you're going to have family gift you some funds or if you have it saved, those sorts of things. Also, as part of the pre-qualification, it's good to know where your credit stands. I think a good ballpark is good enough, so we can talk about that and what that might mean for your loan and down payment options. So the next step is going to be your application. There are several ways you can apply. This all includes providing supporting documents. So we'll be collecting all of your credit details and completing a hard inquiry on your credit. We're going to be asking for your pay stubs, W-2s, tax returns, statements for funds you'll be using for your down payment and closing costs. All these things will be required for an approval to be provided. We do have the availability for you to securely email all of these documents over, or you can upload them directly to your application. You don't have to come in and drop off hard copies by any means, but if you prefer that, you can do an in-person drop-off at any of our branches here in Athens or Logan. Also, for the application process, we'll be going over some disclosures and have you sign those. These disclosures are just to say, hey, you applied for this loan, and these are the initial terms of the loan we talked about and reviewed. Electronic signing is available for this. Once you provide us the supporting documents that have been requested and sign your disclosures, we then send your file for underwriting review. So this is where the pre-approval process comes to play. So next is pre-approval. This is also what we refer to as credit approval. So what OUCU does is called an upfront underwrite. So that is why we are asking for all those supporting documents up front. We're pulling credit. We're doing all these things up front so you can move forward with an approval letter and have a great understanding of where you stand for that approval. We're going to offer a certain amount based on your income, credit, and down payment availability. And this is going to be good for 120 days and be subject to no changes to the application information. This part is huge. So changing jobs, going self-employed, using all your down payment money, taking out credit cards, maxing out your credit cards, those are all big no-nos in the mortgage lending world. Once you apply, we want everything to stay where it is on your credit profile for debt ratio purposes. Most realtors do require a pre-approval letter prior to showing properties, especially in today's market where inventory may be low and properties tend to go pretty quickly. All right, so let's say you are approved, you're shopping, you find a home, you make an offer, and it's accepted. The next part is the contract. So the contract is your legal document that is drawn up between you as the buyer and the sellers of the property. So the contract is going to determine your purchase price, any inspections that you're requiring as a contingency, if the sellers are going to be crediting you anything towards your closing costs, and all those different things. It's also going to give the address of the property, the legal description or parcel numbers. It's just going to be the detailed legal contract that's built between, again, buyer and seller. Once you're under contract, we do ask that you send that contract to your originator. That way we can get your application updated, and we're also going to be sending you updated disclosures going over everything. So that will bring us to the actual process of the mortgage. We're going to be requesting the appraisal services and the title search typically at the same time. Those inspections are going to be going on around the same time as well. An appraisal is requested by OUCU to determine the market value to ensure the home is worth the price you're paying. So this is important because we don't ever want our members to be overpaying for a property. If the appraised value comes back for more, then that's great, and that means you have some equity going into it. If the appraisal comes back for less, then that gives you some negotiation room to go back to the sellers if necessary. A title search is also requested by OUCU from a title company to ensure the seller's legal ability to sell the home. So they're going to be checking for any encumbrances and voluntary liens, such as tax liens or judgments. The seller is obligated to transfer the title as clear and unencumbered. So the title search makes sure that whenever you inherit this property, it is free and clear and you're good to go. Your inspections are again determined by your contract. The most common inspections we see are pest, septic, and gas line, if those are applicable. We don't require those inspections, but if they are listed on your purchase contract, we're going to ask for proof that they passed the inspection and receipt for payment. All right, so once you're under contract, you should be starting to shop around for homeowners insurance so you can finalize the policy when a closing date is determined. All borrowers do have to be listed on the policy, and your dwelling coverage must be at least your minimum loan amount. The agent that you're working with on this policy will need to provide OUCU with the final declarations page and the receipt. Again, we'll go over all of this with you step by step during your process, so really there's no need to try to remember every single thing here. Again, we're here for you every step of the way. Okay, so you've got a closing date, you've finalized your insurance, and now it's time to close. Closing is completed in person at the title company that completed your title search. You'll want to make sure that you take your photo ID with you because they will be verifying that you are who you say you are before you sign off on all those legal documents. At the very end, you are officially homeowners. Okay, so now we've showed you the basics of how a mortgage application works. Let's go over what loan qualifications we have here at OUCU. So the first thing is going to be your credit score. Your credit score is a 3-digit number that we use in order to predict the risk of serious default. These can range from 300 on the lower end all the way up to 850 on the excellent end. So we're going to be taking a look at your score, but we're also going to be looking at your credit history. Most borrowers are going to need a minimum of 3 credit references with a 2-year history. So what that means, let's just say you have an auto loan, a student loan, and a credit card, and you've had all 3 of these for at least 2 years. So that's exactly what we're looking for whenever we're talking about credit history. If you don't have these credit references and 2 years of history, we do potentially have other options for you, such as non-traditional credit, but we can talk about that on an individual basis should we come to that. So you might be asking why credit is so important. Credit is especially important because it's going to go into your loan approval, and it's also going to translate into how much of a down payment we're going to require of you. So we're just going to take a quick look at a purchase price of $100,000 just to make some happy numbers here. At a 660 credit score, you may be eligible for as little as 5% down, which would be a $5,000 down payment. Should you fall below that threshold of 660, so let's just say 659, your down payment requirement is more than likely going to be 20%, which is $20,000 on this example. So you can see the big difference between those down payment amounts, and that is why it's so important to take some steps to boost your credit if needed to get above that 660 threshold. Another portion of loan qualification we're going to be looking at is your debt ratio. This is calculated by taking your current monthly debt payments, including your new housing payment, divided by your current monthly gross income, so income before taxes and deductions. These payments are things that derive from your credit report, so things like car loans, credit cards, and student loans, things like that. Your debt to income ratio is going to be used to measure your ability to manage that monthly payment and repay your current debts. So next we're going to go into an example just to kind of give you guys an idea of how we calculate all of this. We're going to be taking your total monthly debt, let's just say $1,500, divided by your gross monthly income of $4,000 in this example. This is going to give us a 37.5% debt to income ratio. Our maximum debt ratio is 43% for all of your current debts plus your new projected mortgage payment. We like to see it a bit less than that, but we can stretch it up to 43%. Our jobs as mortgage originators are not to sit in our chairs and make you house poor. We do want to make sure that you can have the ability to live life outside of your 4 walls. So that's why one of the main things that we ask in our very initial conversation is going to be what you feel comfortable paying on a monthly basis for your housing, and we'll just build off of that. So your housing payment breakdown is your principal and interest. So that's your loan payment, any PMI. So anything less than 20% down payment is going to require PMI, and that's an additional premium that you'll pay with your loan payments or the credit union on a monthly basis. It also includes your homeowner's insurance and real estate taxes, but we're not going to be collecting those as part of your loan payment. But we do calculate that as part of your debt ratio because we understand it is a required part of homeownership. For your homeowner's insurance, we also require the first year to be paid upfront prior to closing. After that first year, you can get on a monthly payment plan with your agent directly if that works best for you. For your real estate taxes, the county auditor actually offers an escrow directly through them, and you don't have to worry about that big bill coming due once or twice a year. You can just pay it on a monthly basis through them. The next portion we're going to discuss is your down payment. So the higher the down payment is going to equal a lower monthly mortgage payment. because that's going to lower the total loan amount that you're going to be needing from us in order to make the purchase. Your down payment is going to be due at closing with the rest of your closing costs. So typically there's a wire that's required at the very end of the process. All right, now we're going to go over what our requirements are for that down payment. We have a 5% down payment minimum for most buyers, but we do have a 3% down first-time home buyers option. So that is a great option for our first-time home buyers. We can take a look at different assets like gifted funds. So if your mom or dad or relative is wanting to gift you some funds to help with this big transaction, that's something that we can look at and talk about what requirements go into that. Unfortunately, we do not have any 0% down payment options. So 3% is going to be our minimum for first-time home buyers, and 5% is going to be for all other buyers. Okay, so going into more of the down payment, we do require your down payment funds to be your own funds. So what that means is that your funds have been in an account in your name for at least 2 full statement cycles. We can't use cash as a down payment source because we can't source it. So it does have to be available in a savings account or a retirement account, as gifted funds, all of those things. We'll also be checking for any large deposits. Any large deposits will have to be verified and sourced, so just keep all of that in mind. Your originator and processor will be skimming over everything and asking these questions as we go through the process, but it is just something to keep in mind. Now I'm going to be handing it off to Jess so she can talk to you more about private mortgage insurance.
Hi, everybody. Private mortgage insurance has been mentioned a few times already by Kim. It is often referred to as PMI or MI, so you might hear it called a few different things depending on who you're working with or where you're getting the information. PMI is required on loans with less than 20% down payment. This allows for a smaller down payment if you qualify as a first-time home buyer and want to do as little as 3% down, or in other situations, little as 5% down if you choose. In summary, PMI, or private mortgage insurance, protects the lender but also allows you to obtain home ownership with a little less money down. PMI is paid monthly with your mortgage payment, so you don't even have to think about it. There are 2 requirements that have to be met for PMI removal. It is that you have been paying it for a continuous 2 years and reach 78% loan to value in your mortgage. Once both of those have been met, it will automatically fall off. Of course, depending on your actual down payment amount, this could take a little more than 2 years to achieve. Unique situations we see in our area also are homes with large acreage, maybe 20 plus acres, or sometimes harder to get insured with our private mortgage insurance company. So those will be reviewed manually on a case-by-case scenario. So your mortgage originator may bring something up to you about that if they see there's a large acreage on your purchase. PMI will also require the buyer, in addition to the down payment and closing costs, to set aside 2 months worth of reserves, which are 2 months worth of your total housing payment. That does include your taxes and insurance as well, even though you're not going to be making those directly on your monthly payment. So let's take a look at the different closing costs, why they're important, what they are, and why they're required. This is just a little flow chart to demonstrate. It includes your home, the seller, you, and your transaction funds. Closing costs are used to cover the cost of all services to legally transfer the property from the seller to the buyer. This includes transferring the funds from the buyer to the seller. The title company will handle the funds from your loan and your closing costs and disperse them according to the transaction, such as paying the seller, etc. Anybody else that might need to do something as well. Closing costs are made up of several different items. Loan cost, which includes the origination and appraisal fees. The legal piece of it covers the recording of your new mortgage, your deed, and the conveyance of ownership from the seller to you. The title portion covers the title company doing the history search on your property and the settlement fee paid to the closing agent. So they're going to provide you a service and do a closing at their business. So all of that goes on to that fee. The total amount, of course, is going to vary by the loan type, credit score, and those different variables. With having said that, we need to take a look at some of the different products and loan types that we have here available for you at OUCU. When people think of a mortgage, the first thing that usually comes to mind is a conventional 30-year fixed. We offer various terms starting at 10 years all the way up to 30. Typically, fixed rate financing is best suited for long-term ownership, meaning you plan to stay in the home and make that your forever home maybe. If your home ownership plan looks a little different and you have a shorter plan to stay in the home, then an adjustable rate mortgage may be just right for you. Adjustable can sound very scary. However, our ARM product or adjustable rate mortgage product is offered on any one of our terms and can have lower closing costs, making it a good choice if you do not plan to stay in the home long. The rate is determined by the index for 1 year and set by the U.S. Treasury and by our margin set at OUCU. The ARM we offer is a 7-in-1, and what that means is it's a fixed rate for the first 7 years and will begin to adjust in year 8. Adjustment caps are in place though to protect you so it does not adjust randomly. The caps are 2% each year, and after year 7, for example, in year 8, it can adjust 2%. Over the life of the loan, it cannot adjust more than 6%. For example, also, if your signing rate is at 6%, your rate would never go above 12 for the life of the loan. We do offer construction loans as well. They're available on our adjustable rate mortgage also, our ARM loan. They are a one-time close and typically have a 6 to 12-month build period. That can vary, of course. A contractor also must complete the build. Typically, it's best to meet in person with this type of product with your mortgage originator. Each situation is different. For example, you might already own your land, or you may need to purchase it as part of the transaction. So a lot of the details do need to be discussed. So why choose OUCU? We have a great, easy application process. It's available 24/7 online. We're available to communicate with you electronically. You can sign all of your disclosures electronically. You never have to wonder where your mortgage is. OUCU retains all servicing rights. You will always make your payments to OUCU and call us for any questions you have. And as Callie mentioned at the very beginning, we are the top mortgage lender in Athens County, and most importantly, we care about our members and your ability to become homeowners. So the mortgage click system is where you apply, and you can apply 24/7 with instant approval. You can print that approval letter for shopping. So maybe you get to apply over the weekend. You have availability to your pre-approval letter right then. On our website, you can view current rates and calculate payments. We have a lot of nice tools available for you to learn about the process and get the information you need. If you're ready to make an appointment with us or have additional questions, you can use the QR card here on your screen. There's also a digital coupon attached as well. Of course, we'll have a list of everyone who attended today, like Callie said as well. So if you can't click on this, that's fine also. Appointments can be virtual, in person, or by phone. So you don't necessarily have to take a day off of work to come to the branch if that's better for your schedule. We will send a recording also out to everyone who registered in the coming days. We again want to thank you for your time. Feel free to put any of your questions in the chat and we'll be happy to answer.
Wow, Jess and Kim, you did a really great job. Thank you both. I think if one thing is crystal clear today, is the fact that you are in good hands with the OUCU Home Loan team. One of my favorite parts you mentioned is the reminder that we service our loans in-house. It just doesn't get any more local than that. So now I would like to open the chat. Again, please select everyone in the chat option so we can see your questions. So I will give everyone a moment to find that feature and we'll see what questions we get. And I can start really by asking the question to our participants here today, who here is currently shopping for their first home? Um, is anyone who is shopping for their first home already working with a realtor in the process? Have any questions about that step? Oh, we have one here. Let's see. Haven't started yet, but looking to buy the first home in the next year or so. Great. Someone else just looking for now. Fantastic.
That's great. I think it's definitely good to start early and start educating yourself well before you start the process.
Just getting started, but this seminar, this
good,
seminar
Maggie.
was really a confidence booster. Great. Are you able to work with folks outside of Athens? I'm in Columbus, but grew up in Athens. Glad
Absolutely.
you're here.
Anywhere in Ohio.
Anywhere in Ohio. Perfect. And we do a lot of, like they mentioned with Mortgage Click, a lot of the application is online. So really convenient for those who don't necessarily have the convenience of having one of our branches right here down the street. So yeah, of course. All right. Has everyone had an opportunity to ask their questions? This is I mean, we've got a panel of experts here. I'm sure we can get, oh, is there a way to remove PMI before the end of 2 years if the second condition is met by making extra payments within the 2 years? Great question.
So actually, it's a mortgage regulation and requirement from that PMI company that it's kept on the loan for 2 years and reach 78% loan to value. So you do have to exhaust both of those things. So you would have to keep it for the full 2 years.
Haven't started yet, but I'm definitely thinking of buying my first home within the next 2 years. Live in Athens. Well, good luck. We are here for you. Here's a good question. How does zero down work for device members? I'm sorry, service. Service members.
So we don't offer any 0% down payment options. Unfortunately, we don't offer VA loans. We're just doing conventional loans. So as a first-time home buyer, 3% would be that minimum, or 5% for all other home buyers.
Awesome. Thanks, Kim. I'm going to wait like one more minute because I know there's potentially another question out there, and I want to give you that opportunity. Oh, does the pre-qualification process run a soft credit check? Great question.
So we do have a pre-qualification tool out on our website, and that can give you a good idea of where you stand. And if your realtor will accept that pre-qualification letter, you can obtain one that way as well. Just know that that pre-qualification letter is coming to you based on what you entered. To actually get a good pre-approval and it based off of full application, then a hard credit inquiry is obtained. You're welcome, Maggie. Thanks.
How long is the pre-approval valid? That's a great question.
A pre-approval is valid for 120 days. So when we pull your credit, that credit report is good for 120 days. So that's when the clock starts on that.
Oh, thank you. All right, I'm feeling great about these questions. I'm so glad everyone had the opportunity to ask. We're still here if one slide like sneaks in, but I want to remind you we have you can book your appointment with this amazing home loan team on our website. They do in person. You can meet with them in Logan, meet with them here in Athens, virtual appointments, which is super convenient, and give them make an appointment by phone as well. So I think that is a wrap on chat. Does everyone feel good about that? Yeah. All right. Well, we are very excited to work with you, and thank you all for your time today, and have a great rest of your day.
Bye-bye, everybody.
Thank you.
Thank you for joining us.